Good morning. Welcome to Options Tenor. It's Tuesday. Happy Tuesday, everybody. April 9th, 2024. Just want to do a follow-up from yesterday. We have a little bit of follow-through. We haven't made new lows in the SPY yet, but we are back underneath the 8 exponential moving average. We're going to take a look at SPY on multiple time frames. Check back on NVIDIA. We had our move. I don't believe the move is over, but I think some consolidation is necessary. And also, I just want to mention that we're not going to look over them, but I will be looking hard at, I'm already short Amazon, but Google and Meta should play a little catch up as well. Microsoft, yes, but I don't trade Microsoft very often, but I think most of these should follow suit if we're going to continue to head to the downside. So if you're new here, go down to that bottom right-hand corner, hit that Options Tenor logo, and subscribe. Also, don't forget to like the video. You guys have been fantastic about supporting this channel. We're seeing a lot of growth here, so thank you very much. Let's dive into it. We have SPY on the monthly time frame. You see, we're going back to 2000, touching the top of 2022, and we're not quite up here, so I always want to leave, each time I show this, I want to leave, the opportunity that there's higher to go. I don't think that's the case. I think we have a pullback to go to, and with that pullback, I think we're going to test this breakout area, so maybe we hold this area and go tag the top of that wedge. That's a possibility. Not necessary, though. So we'll just keep all opportunities in mind. That's not our primary scenario. We'll go over that on the daily time frame, so make sure you stick around. I've been doing these videos pretty often lately with these developments, so make sure you hit that notification bell. And let's move on. We're not going to look at too many. We'll look at the daily indicators, but that's pretty much it. Otherwise, we'll take way too much time up. So we have the weekly time frame. And with the weekly, again, we have some room up there, but we have this beautiful channel. Okay, we have a top here, and here. We rode that top for several weeks here. We have 1, 2, 3, 4 touches, almost 5, maybe 5 touches on the top of that channel. So clearly we were bearish on each of these touches, and we never got any follow through. But this time looks just a little bit different. You let those words, it's different this time, right? We have a possible, I guess you can call it a hangman. I mean, technically this could be a bearish engulfing candle because we're engulfing that week from before. This is last week, and that's a week from before, and we're getting a little bit of follow through at this point. We need to undercut for a confirmation the bottom of this weekly candle, and that would clearly be very bearish because then we would be underneath the 8 EMA on the weekly time frame. Remember the 8 EMA, if you're new here, the 8 EMA is our trending indicator. We are technically on the weekly time frame still in an upward trend. Now, this also is a consolidation area. We have the 8 EMA in the bottom of this last week's candle, so you see a lot of stuff. If we break down from this area, let's call it 512. Let's call it about 512. We break down from 512, and I think our next point is at least on the weekly time frame, towards this 20 simple moving average around 495. But ultimately, I think we're going to get to this 472 down to this 453 possibly. That would kind of guide each of our scenarios. If we came down, you notice this consolidation area here, I talk about it often on these videos. Our first stop would be with this consolidation area. So that's about that 472. I do think you get a nice reaction off of there, but ultimately it would make a lot more sense for the bulls and bears to have both their scenarios looking to play out if we get down to this 455. That would, and I'll show you both of these scenarios on the daily time frame, that would cross over this high here, and that's what I would be looking for as an ending diagonal or an expanded ending diagonal that already had a top. So if this is not the top, then I think we come down, possibly cross. You don't have to. It's not a necessary. It's not a requirement. Cross there, hold the bottom of this channel, and make a new high, and possibly test that upward wedge. So that's the bullish scenario. The bearish is that we're done. All right, and that's my primary. So I'll show you those on this next view after we do the traditional technical analysis. Okay, so for the traditional technical analysis around the daily time frame, the trend is our friend. And you see that consolidation zone. That's where our zone will be. That's where the 200-day moving average is, right down here near 463. So a lot of times, if you look at the moving average of 200, you spike down through it. It doesn't just hold. This time it held above it, spiked through it. You got it spiked through it, held above it right before. So yeah, we can get a reaction off of it in the beginning, but you know, it's not usual when the 200-day moving average, just you tag it and you move from there. So if this is the case where we get down to this point, I think we'll undercut it, possibly even come down to about the 452. The bottom of that consolidation, I could actually expand this a little bit. That's a previous high at one point, and hold there and spike back up. So either way, either situation, I do think that we make a sharp move to the downside and we spike back up. It's just whether or not we get a new high, whether we continue. That's what we'll have to evaluate with our indicators and see if we make new highs or if we break down and continue this move. So let's take a look at the option center setup here. We have the MACD, which we've clearly had the negative divergence, and now we're getting some separation to the downside with the histograms, the crossover. We're still in bullish territory, so you know, slight bias to the bull situation, but we have negative divergence in the RSI. That's why, you know, really I don't think we're going to go much higher, if any, at all right now. So on the RSI, we could draw a consolidation that was happening here, and notice that we broke that consolidation. Some triangle there, not perfect, and we're just merely back testing it at this point. And so I do think we have further to go. We didn't really even get to the oversold point. And if this is a bear trend, we will clearly move much more into a oversold territory and likely get divergences as the wave 4s and 5s play themselves out. So with the reversal, I do like to look at the Williams R%. We did get an oversold. That's why we had that nice sharp bounce. And from here, I do think we continue to go lower at this point. And if this is let's go to the Elliott wave, and I'll explain if this is a wave 3 that we're starting to get into, then let's do the expanded ending diagonal. This is our primary situation. And if this is a initial wave 1, we're getting into the minor degree wave 3, okay, 3 of 1. And so really indicators should get oversold. There should be divergences, very similar to how this move played out, where it just seemed like our indicators just didn't work. We got our divergences, then we'd get a small pullback, and then the continuation would happen. So let's see what happens. I think this is what is going on right now. I think we're going to get a nice follow through. I think the CPI, I think we just got a little reaction today from a technical standpoint, and I think the CPI will be an accelerant for this fire. Okay, and so I do think we continue to the downside. Might get a pause at the 50. That's about 508. Might get a pause there, but again, I just don't think that's going to hold very well in this situation. We'll see. Okay, so this is a projection. If you're new here, this continue to show what I think is happening. We have an ABC for a 1. This is an expanding ending diagonal, which is also known as a blow-off top, and I think we are at that top. So it's an ABC for a 1, ABC for 2, and now the waves start to expand. A nice larger 3, larger wave 4 is larger than 2, and massive move for wave 5. This is the blow-off top into a huge area, 127.2 extension, and you see we did overthrow it. But you see, a price held at it for a little bit. So it's an important area, and we're holding that today as of right now. But also note that the 8 EMA is crossing over the 20 simple. And if we remain underneath the 20 and the 8 EMA, this will be our trend to the downside. So right now we're just kind of playing around with it. And with CPI happening tomorrow, and I'll show you more on the 65. So make sure you stick around there. I think we'll get some more consolidating. It'll seem equilibrium today going into it. It's before the bell tomorrow, so I wouldn't hold unless there are hedges. I wouldn't hold too many positions going into it. Okay, so after our initial move, which I do think we make it down to this zone, we either get a bounce in continuation, or we make new highs. So I know that's a binary situation, but we have to keep that in mind. We're looking long term. Nobody has the foresight to see exactly what we're doing. But if you play it, because we're traders, if you play it as if this happens, then this happens. So as a trader, both of our scenarios, bullish and bearish, are moving the same direction. So this is a really good swing trade for us. For either situation. And then this will be the difficult one. We'll play the bounce. The difficult part will be, we have to be cautious for 2 reasons, because the bounce might be a dead cat bounce. We'll have to see what the indicators show. And maybe a dead cat bounce in continuation, but we also have to watch out for this mirror image. Okay? Price action really accelerates to the downside, and we get a measly bounce, but we think we're going to get a 60% retracement or 70% retracement, but we only do something like this and consolidate sideways. First of all, if we consolidate sideways, we should keep in mind that this could fail, and just have your points of references to where if it does fail, then that's really, really bearish, and the next move is going to be pretty devastating. So this easily could form a head and shoulders with just a mini shoulder here. It doesn't have to. It can be a nice steep one and continue down, but just know that it might be a mirror image from there. That typically isn't. It's really hard to just be aware. That's all, because it's usual when you have a nice steep move that you get oversold, and you have a nice big bounce, a nice steep retracement, to get to reset the indicators, get all the bulls in, and then you continue to the downside. And that could be seen in, for example, 2022. Nice sharp move. And both of these really, I mean, that's just a massive rip your face off rally. But how appropriate would it be if you didn't get much of a bounce at all and it just continues to the downside? That would devastate some bulls and bears. So, okay. So our secondary situation is that we're not quite done yet. This is an expanding ending this is an ending diagonal in that we have a new high. And sorry, this is so busy here, but just look through this. We have an A, B, C for a wave 1, wave 2, and we completed wave 3 in this scenario we get our nice sharp pullback in a zigzag form for wave 4 that crosses over wave 1. It is usual that you get the crossover on wave 1 for an ending diagonal. It's not a requirement, but as usual. And then you get a new high there, 3-wave move up for wave 5. All right, so we have to keep that in mind. These economic circumstances where we have inflation out of control, they're just not the typical recessionary scenario that you go to like 2008. You have a top, you get a huge drop. This may play out in multiple different ways. So just keep that in mind. Looking for nice pullback and possibly a new high, but we'll be, cautious when we get if we get a large bounce there. All right. So we can move over. Let's go over to QQQ and then NVIDIA, and we'll go ahead and go down to the lower time frames, check out a couple things. So the Qs, really, I just want to show that we have this wedge. This is the wedge top. We broke over that wedge, and now we're actually constantly testing, trying to stay above that wedge. We're doing it again today. That also has to do with the 50 simple moving average. So as of this point, we're underneath the 8 EMA and the 20. If that remains the case, that could start our trend, but we're going to have to get through that 50 and notice the support area around 434, 435. This is a very important area. We break down from this area, from the catalyst tomorrow, and it's going to be a sharp move. It's going to be a pretty relentless move because we have a 1-2 setup. We'll probably make it down. I'll show you some targets. So if you're watching this on the 65-minute, I'll show you the SPY target and the Q target. If you're in the Discord, then you'll already know those. Discord's free, by the way, in the description. NVIDIA. NVIDIA had the breakdown that we're pretty much looking at from the Qs. So this is, in my mind, a prequel of what's going to happen on the Qs. We had the breakdown from about the 860 area, and now we're testing the gap area. So we're getting a reaction off of it. I don't think this move is over. We do have a 50, and that's a good spot where we're going to take some profit from our puts. I don't think that's the end. I think we'll consolidate around the 50 and then continue lower. Another good spot for a bounce would be that 750 area. So if you either roll out your positions, if you can handle, some consolidating in time, then maybe roll your positions out a couple weeks or so to give you some time to get down to these areas. But with NVIDIA, it looks like, and this happens all the time with stocks like Tesla and NVIDIA, it looks like we have some sort of move for a wave 1. I don't think this is the case. We'll look on the 65, but I think we had a spring action that is just now expanding, even though it was heading to the downside, and it's now going to start to expand, and then towards these target areas, maybe even down to the trend line, you start to get your wave 4s into 5s, stair step 4, 5. But from here, at this point, I think this should be a pretty continuous drive to the downside on the daily time frame. Okay, we'll move down to the 65 for NVIDIA just to give you a look at that, and we'll kind of go backwards, and then we'll end off with the VIX. Okay, so we have our options expected move, so I wouldn't be surprised if we just kind of hung around here for the rest of the day. But we had our move here, a bear flag breakdown, just happens again, and this is really kind of a crunched up area. If this is the kind of move that I think is happening, we need to see a pretty sharp move here, pretty relentless, and for NVIDIA. Otherwise, if NVIDIA is done and starts to break the downtrend line to the upside, then clearly something else is happening, because the market is not going to move much lower without NVIDIA moving lower as well. All right, so again, we're in this gap area, holding the gap so far. I think it's very likely that we gap over that gap and create a, if we don't do it today, if we don't close it today, then I think we'll gap underneath it and create a island gap and have continuation. Again, we'll start taking profit off around the 805 area, but I do think this continues out into next week. The Qs, I'm going to show you, especially in, you got to kind of look at all these together. So if we think that the Qs are going to break down underneath this gap area, 434, 435, and start to close this gap, well, and especially, let me show you how we get the target here and get down to this 420 area. If you notice this on traditional technical analysis, all we're doing is coming down to, expand this out here. Okay, so this looks like the support that we're going to come down to, where we have these nice touches here, some consolidation, and also our measured extension here. Okay, so you have these fibs, first of all, these Fibonacci's from the bottom of this move to the top, the all-time highs. You have a 50-60% retracement right in the zone, so you're going to see a reaction there. And so these extensions here are for our possible wave 1 and 2. Let's see. Let me redo this. I think I have this a little off here. So here's what you do. You take this whole thing can be a wave 1. All right, that would be some sort of expanding diagonal, and then you have the wave 2 pullback, which failed today so far. That would be one possibility, or this is a 1-2, 1-2, very similar to SPY. So I'm going to treat this as a 1-2, 1-2. So I'm taking the top of this impulse move for a 1, and then a wave 2 pullback, and we get our wave 3 headed around the 423.50 area. So right about that 50% area, and that would be just for the wave 3. Okay, so there's going to be consolidation and continuation. So we'll be looking at about 423.50. And on the 65, that's going to be right above the support that we're talking about here. So maybe a spike through this this gap area. And I'm looking to the left, by the way, you guys. That's when you have these zones, you have 423 right about here. So you look to the left, yeah, that was some support there from that move. This is a zone. It was support here, a gap, and resistance over here. So 423.50 looks like it could be a good zone. I'm not going to adjust this. I'm not going to pull this up here. I'm going to keep this just in case we get a momentum spike through. And then we should get some consolidation and again move down to the next level. And this is the next possible level to see some to see a low in, and not necessarily the full low for this move here. You might get some more consolidation before heading lower. All right, so that's on the Qs. SPY is just a little bit easier because it's less volatile. So we have too much stuff happening on the Elliott wave picture, so I'm just going to do this on the traditional technical analysis here. Move in a little bit closer. And now, if we have our 1, 2, 1, 2, we want to see what this measured move is from this initial wave 1 going into wave 2, where we got just a slight new high today that failed. So we take the top. Let's add our tool here, our Fibonacci extension, to the bottom of that impulse and to the top of the correction. And that gives us down to the 162 around this 502 area, which would bring us right into the gap support and also some past support resistance right here as well. So this would be a good zone to take off profits for this next move. Now, with that said, let me take this off here. So I do think we'll get some support around here, around the zone. With that said, I think today what we're doing is just coiling up again. We have such important information for the market tomorrow morning before the bell that after this impulse move and a correction and a nice move down here to test the moving 200 moving average for the 65 minute here, I think this is going to be considered even a lower degree wave 1, 2, which should just consolidate more sideways. I don't think, in our mind here, if you want to draw it like a pattern, then all we're doing is triangulating one more time going into tomorrow. So what we do in this triangle is, maybe we bounce higher. Wave 2s can be very deep, but if this is a beginning of a wave 3 down, this probably just consolidate fairly shallow before tomorrow heading lower. All right, and I told you to target that initial target to the 404 area here is just the initial one for this wave 3. Okay, then you have a consolidation for wave 4, 5, maybe down to this 500 area. All right, so that might give us after you get this expanded wave 3 and then the 4545, and it can go much lower, don't get me wrong, but this will be probably our first initial wave 1 before getting a bounce and then heading lower at that point. So let's just see what happens. What we're gonna have to do, you can't see this an impulse wave. There's 5 waves in here because it's so sharp. In this next one, we want to look for a 1, 2, 3, 4, 5 going into our target area. And I'm not gonna be adding any calls or anything like that anytime soon. Just play with the trend to the downside. Unless you're a bull, then you can use this as your reference low. So you can go have some calls here, look for new highs. It doesn't seem like a very wise thing to do, but at least have your reference and your stop at about 514 right here. All right. Last thing is the VIX. And with the VIX, we had a falling wedge, back tested the wedge. I know that's super volatile, so it came below that trend line, but then had a nice move, and all it's doing right now is making a bull flag here. Had a slight breakout and then fake break. Again, the VIX, some people say you can't do technical analysis on it, but this is a bull flag, and we should see some continuation going into tomorrow. So it wouldn't let us have that continuation with the CPI coming into tomorrow. It wasn't going to let us have that bull flag breakout. That would be too obvious, and then you wouldn't question yourself to this is moving to the downside. You'd question. Now we have that question in mind. Hey, is this a fake break? CPI is going to be whatever, and this is going to drop. Market moves up, or is this just pausing for the CPI and then we continue to break out from this bull flag? That's the question we have. I think this continuation happens tomorrow. That's it. So thanks for joining us here at Option Center. Have a wonderful day. We'll talk to you tomorrow.